Hello everyone, welcome to the 33rd episode of me learning how to trade using Forex. So in the last video we went through the what is Forex trading page on the Forbes advisor section, I guess. We finished reading through all of this and made the notes here, and I think the last time we said in this video we're gonna explore more of the advisory page, I guess, about Forex trading in general. So yeah, let's see. So in the Forbes page, you got the official advisor bit. Not travel insurance, not car insurance, not investing. Actually, it could be investing. Insurance, credit card, investing, business. Paid placements. Right, okay, business. I don't think this is business. It probably would be in investing. Stocks, sharing, and trading. Here we go. This is the way to go. So, Forex trading, stocks, shares, and trading. Why are these two separate though? Forex trading and stock, shares, and trading. Oh, trading as in stocks. I think this is only stocks trading, isn't it? Best trading platforms. What is this about? I think this is only what is it called? Stocks and stuff. Yeah, okay, so not this one. Forex trading. Here we go. Best Forex brokers 2023. These are only websites, which does not help because it doesn't help with actually telling you what to do. Okay, so how to trade GBP USD. This is a graph. Currency converter. I don't think this is. Oh, actually, it might be useful. Let's read all this anyway. What is Forex trading? So this is the page we went through last video. Let's get reading on this one then. GBP/USD rate. Exchange GBP to USD. Convert pound sterling to US dollars. Yep. Table of contents. How do I use the currency converter? Where should I exchange? When should I exchange money? Is now a good time to buy dollars? Heading to the United States. Need to know how much an amount in sterling will buy in US dollars. We can do the calculation for using latest exchange rate information. Here you can track real-time GBP/USD rates and boost your knowledge with our calculator interactive charts. How do I use the currency converter? To use our currency conversion calculator to tell you how many dollars you will get for your pounds, simply enter the amount of sterling you wish to convert and make sure you've chosen the ticker GBP as your starting currency and the USD ticker as your ending currency. We will then provide you with an estimate based on the current rates. Each currency has a ticker of its own which you can find from the drop down menus. Okay, so currently £1 is, as of today, so February the 2nd, 2024, as of today it's $1.2633. Right. And this is as of today, so there's a massive drop here. Then like this. Right, when should I exchange money? It is difficult to know exactly when to exchange currency. Many factors can affect the value of the currency you're planning to exchange, from economic events to the time of day. One tactic is to monitor conversion value on different days ahead of making the transactions. You can get a good idea of what is happening between a sterling and a dollar. If you see it swing dramatically away from typical amount, you can buy or buy your time accordingly. Today, daily percentage change minus 0.91. So GBP has gone cheaper today, or minus 9.1%, minus 0.91% cheaper than it was yesterday, I guess. Can I click on this? No, I can't. Yeah, so 2726. Is now a good time to buy dollars. At the time of writing, November 2023, the pound is worth about $1.25. This is worth 1.26. So it's risen. In recent months, it's fair to say that sterling has enjoyed a reasonably strong period of performance against the greenback. Especially remember that a pound was worth about 1.07 last autumn, following what is generally considered to be the ill-considered Liz Truss quasi-Quarton budget. Okay. What's more difficult to call is how the respective currencies will perform going forwards. The pound and dollar are one of the world's most traded currency pairs, and multiple factors affecting the exchange rate. Affect the exchange rate. These include monetary policy on either side of the Atlantic, along with the prices, inflation, economic confidence, and sentiment. Prior to making a trip, it's always worth keeping tabs on how the pound and dollar are performing against each other. But remember also that deploying them the best ways to exchange currencies, as outlined above, are as likely to save you as much money as time your next purchase to perfection. GBP 2025, 2026, 27, 28, 29, 30, 21, 22. Oh, so there's a drop here. So I think this is showing that the pounds is going down in value basically. Except this bit here. Because you need less US dollars to get that £1. So 1 to 1.26, 50. Right, okay. What is the best way to exchange money? One of the worst places to exchange money when you're traveling is an airport bureau de exchange. They charge some of the highest fees and often have uncompetitive exchange rates. Why? Because they know you're probably itching to get some currency for your destination, and you don't really have another choice. They work on the basis that you'll pay what they're asking just to get the job done. So if you can, plan ahead and use a bank branch or a post office. In larger branches, there will often be a walk-in service for popular currencies such as USD and Euros. It should also be possible to order in advance for collection from the branch, or you may be able to order your currency to be delivered to your home. Check for fees and possible limits on the amount you can order for delivery. What if I need cash while I'm away? If you need cash while abroad, you can withdraw funds from an ATM in the usual way, but if possible, take a card that does not charge a fee for international cash withdrawals. Otherwise, you may find yourself paying $2.5 for every $100 you take out. Ideally, this should be a debit card. If you use a credit card, you'll be charged interest on the amount withdrawn from the moment it comes out of the machine, regardless of whether you clear your balance within the interest-free period, and any fee would be slapped on top. How much money should I exchange for my holidays? This is a personal decision that will partly be determined by the sort of vacation you're planning. City break in reach of plenty of cash machines, for example, or journey to the back of beyond, and whether you're traveling solo or in a group of friends and or family. Despite the rise of debit credit cards and the advent of contactless payments, travelers in a foreign location are likely to feel a little financially naked if they don't at least carry some hard currency in local coins and notes. Not all bars, restaurants or retail outlets accept cards, of course, and payment systems relying on an internet signal have been known to fail. So for life's essentials, if nothing else, it's probably worth carrying £50 to £100 in local currency to avoid any awkward situations. That said, carrying too much cash can bring its own risks. Not everyone is comfortable carrying bundles of cash on their person. Where possible, remember to split up your cash and make use of the hotel safes and strong boxes. If you're not intending to spend all the cash you've taken away with you, look out for buyback guarantees at the time of buying your foreign currency. Some providers let you lock in the exchange rate that you bought at. On your return, it's then possible to sell back unwanted spare foreign cash, usually without commission fees. Of course, if you're planning on returning to the same country relatively soon, then it's probably worth hanging on to residual cash and making use of it on the next trip. Okay, so that's all the Forex done. There's not that much on Forex, to be fair. These are all stocks. Buying guides, stocks, cryptocurrency, how to buy guys. Long-term investments, best general investment account. Right, okay. So, even though this is still about Forex, whoa, what have I just done? Not page break, layout, below. Because there are other sections here, I am just going to go through them just so that I can say that I've finished reading through Forbes, the website. So yeah, I guess, well, I'm going to go into stocks later on anyway, so I might as well start doing this now. Let's see, so stocks, shares and trading. Best investment trading apps. I don't think we're going to be needing this because it doesn't tell you. Actually, this could be important. I'll pick up the best investment trading apps UK for February 2024. Yep, investment trading apps are aimed at do-it-yourself investors, enabling them to use their phone or tablet to buy and sell stocks and shares and a wide range of investment funds, including index trackers, exchange-traded funds and investment trusts. Alright, okay, so I'll pick of the best investment trading apps UK for February 2024. Date is 02/02/2024. Published 1st of Feb, so yesterday, literally. Okay. Investment trading apps are aimed at do-it-yourself investors. So, do-it-yourself investors, enabling them to use their phone or tablet to buy and sell stocks and shares with a wide range of investment funds, including index trackers, exchange-traded funds, and investment trusts. The investment app market has become hugely competitive. Some providers come from established stockbroking names with their roots in online desktop trading platforms. Others are standalone app providers. The domestic market was recently given a boost with the news that Robinson, the US share trading app that helped ignite the meme stock GameStop share buying frenzy, is planned to launch in the UK in 2024. Rival share dealing services, Public.com and Webull, launched their services in the UK in 2023, adding to an increasingly crowded marketplace. Rival share dealing services. With this in mind, it can be daunting for would-be investors to find the app that's right for them. So we're taking an in-depth look to identify what we believe are the best versions on the markets, paying special attention to the investment choices, fees, and other key features that help and enhance an experience for DIY investors who are on the move. Right, okay. Why you can trust Forbes advisors' ratings. Our editors are committed to bringing you unbiased ratings and information. Our editorial content is not influenced by advertisers. Right, okay. We use data-driven methodologies to evaluate product providers, so all companies are measured equally. You can read more about our editorial guidelines and methodology for the ratings below. Market-wide survey of leading investment apps, rigorous assessments of fees and investment choice, thorough analysis of pros and cons. Right. What are picks of our best investment trading apps? Yep. Methodology. We applied three main criteria in selecting our list of best investment trading apps. Does the app offer a good level of functionality for investors? Does the platform provide access to a range of investments from different international markets? Does the platform have a good rating on consumer review site Trustpilot? If the platform did not currently have any reviews on Trustpilot, we consider its ratings from other review sites. We compare different features across the leading investment trading apps with the greatest weight given to the level of fees, the range of investments offered, and the quality of information provided on the app. We also consider other features, including the options for desktop trading, advanced trading features, customer support, and research foreign transaction fees, the option of holding fractional shares, and the types of accounts on offer. In addition, we checked that the trading platforms were authorized by the FCA and reviewed the level of customer complaints using the data from FCA. We overlay this research with editorial judgment to arrive at our Forbes star ratings. What assumptions did we use for our fee calculations? We calculated the fees by platform based on the following assumptions. Type of investments: split 50 shares of 50 funds, or 100% shares if funds were not offered. Frequency of trading: buying or selling one investment per month, totaling 12 a year, split equally across funds and shares, or 100% shares if funds were not offered. If 3 monthly trades were offered, we assumed that half of these were able to be utilized and remaining trades incurred a fee. Platform fees: we assume that the portfolio is split equally between funds and shares, as platform fees can vary significantly between these. For platforms not offering funds, we calculated the platform fee based on holding shares only. For platform offering reduced platform fees for frequent traders, we assumed that half of these were able to be utilized over the year. Value of portfolio: we calculated the fees for 3 different portfolio values, being 1,000, 10,000, 50,000. Type of accounts: for providers offering different accounts such as Interactive Investor, we calculated the lowest cost option for each portfolio value. What is an investment trading app? Investment trading apps offers investors a means of buying and selling stocks, shares, funds, investment trust, exchange traded products, and other assets directly rather than through a financial investor. In its simplest form, an investment trading app provides software for investors to make their trades via an application on a phone or tablet, although many platforms also offer desktop and telephone dealing. The app market has grown significantly in recent years. According to the app radar tool from data firm Split Metrics, the estimated number of app downloads stood at 6,848,670 to 14th of October 2023. From the beginning of 2023 to 14th of December, downloads to the top 8 apps providers alone stood at 1,127,283. These figures, included in Table 1 below, refer to global downloads via the Google Play Store. Lifetime downloads. Oh, that's a lot. IBK, R Mobile, Moneybox Save and Invest, Plum, Smart Investing and Saving. Downloads 1 January to 14th December 2023 estimated. Investors are able to view their investments in real time on the app, enabling them to monitor their portfolio and make timely investment decisions. In addition, apps typically offer advanced features to allow orders to be placed automatically. However, one of the disadvantages of apps is the risk of impulse and overtrading. Shares should be seen as a long-term investment, as speculating on short-term price movements is challenging even for professional investors. True. What assets can you trade on investment apps? Investment apps offer a wide range of assets from shares in the UK and international markets to funds, OEICs, exchange-traded funds, ETFs, and investment fund trusts. Right, okay. What notes have I made currently so far on this? Investment apps beginning, so don't need to make notes on this. Investment trading apps offer investors aimed at doing so, allowing to buy and sell stocks and shares. Are these buy and sell stocks and shares, funds, investment trusts, exchange traded products, and other assets directly. Offer a wide range of assets from shares in the UK and international markets to funds, OEICs, exchange traded funds, ETFs, exchange traded funds, and investment trusts. A few of our selected providers also offer trading in more specialist assets, including foreign exchange or Forex, commodities, and cryptocurrencies. Commodities, remember, is like oil, wheat, gas, that sort of thing. However, these assets are highly volatile and suitable only for experienced investors. However, these assets are highly volatile and suitable for only experienced investors. Yep. The Financial Conduct Authority's Financial Lives Survey, published in 2023, shows that the main reason 51% given by respondents when asked why they invest was to potentially gain higher returns than offered on savings products. The main reason given by why they invest was meant to gain higher returns, so to make money basically, rather than offered on savings products. Than offered savings, so these are saving products, I think they mean savings accounts, so they're trying to get more returns, make more profits from the stocks than saving accounts. The second most important reason was investing to provide an income in retirement, while the third highest response was to invest for a rainy day. According to the survey, the most commonly held investments in May 2022 were shares/equities, so stocks, held by 21% of the respondents, followed by stocks and shares ISAs 17%. Wait, shares and equities, not stocks. Investment funds were held by 9.1% of respondents. Shares, equity. I swear shares are stocks though. Stocks and shares, individual savings accounts. Okay. How do I open a trading app account? The account opening process can usually be carried out online or via the app, and the major platforms state it should take around 10 minutes. You will need to provide some basic information such as bank account details, debit card details for a lump sum investment, and your national insurance number. You may have to supply further documents to support the verification of your identity. although these checks may be carried out electronically during the initial application process. When these checks are complete and funds have been received into your account, you'll be ready to start trading on the app. You can trade UK shares on a real-time basis from 8 AM to 4:30 PM when London Stock Exchange is open. After logging into the app, search by company name or ticker to select the share you want to buy. What trading fees will I pay? So trading platform fees. Fee types. Share trading fee. This is the flat fee charged by the platform each time you buy or sell shares. Flat fee charged by the platform each time you buy or sell shares. Some platforms charge no share trading fee. While others may charge between £6 to £12 per trade. Trading fees for funds vary from zero to the same fee as trading shares. Right, okay, platform fee. This is the annual fee charged for holding the shares and funds on your platform. Annual fee charged for holding the shares and funds on your platform. Some platforms charge no fees for this, others charge a flat fee, and some charge a percentage, typically 0.25% to 0.45% of the value of your portfolio. These fees would usually be taken out of any cash held into your account, or you can pay fees directly by debit card. However, the platform is likely to sell a portion of your shares as a last resort if fees remain unpaid. It's also worth looking at the types of investments that incur in the platform fee, as some platform charges for holding funds, but not for shares. When a platform fee is charged for holding shares, this is sometimes capped at the maximum amount per year. There are two types of percentage-based platform fees. Tiered fee. This is the most usual type of platform fee, whereby you pay different fees on different slices of your portfolio. For example, if you have a portfolio worth 300,000, you might pay 0.45% on the first 250,000, then 0.25% on the next 50,000. Non-tiered fee. A small number of providers charge a non-tiered fee, whereby you pay the same fee across your whole portfolio. For example, if you have a portfolio of 300,000, you would pay 0.2% on the whole 300,000. Right. Foreign exchange fee. If you buy or sell shares denominated in a currency other than the pound sterling, platform charges a foreign exchange fee. Charged when buying or selling shares denominated in a currency other than pound. This is also referred to as a foreign currency conversion fee and typically varies from 0.5% to 1.5%. Some platforms also charge a high trading fee for overseas shares. A small number of platforms will allow you to hold foreign currency in your account, which enables you to convert it once and use this money for buying shares and holdings that proceeds from selling shares in the local currency. Investments in a currency other than sterling are exposed to currency exchange risk. Currency exchange rates are constantly changing, which may affect the value of the investment in sterling terms. You could lose money in sterling even if the stock price rises in the currency of origin. Stock listed on overseas exchanges may be subject to additional dealing and exchange rate charges. and may have other tax implications and may not provide the same or any regulatory protection as in the UK. So be careful when buying basically foreign stocks. Other fees. Some of the platforms charge other types of fees, such as inactivity fees and withdrawal fees for account held in overseas currency, and fees for trading by telephone. Although not technically a fee, platforms also make money on the buy-sell spread on shares. For example, you might be looking to buy a share with a buy-sell spread of 98 to 100 pence. This means that you pay 100 pence to buy a share and receive 98 pence to sell a share. Yeah. Some platforms may offer more competitive buy-sell spreads than others, and less traded shares, such as the FTSE small cap companies, typically have wider spreads than FTSE 100 companies. What other apps could I consider? The investment trading app market has become increasingly competitive in recent years. Our selections above offer would-be investors a range of providers, each with eye-catching features that could suit their particular investing style. This list is not exhaustive, however, and will be bolstered further when Robinhood enters the UK market in 2024. XTB online trading features a minimum transaction value of £10 on trades and features 3,000 plus stocks from 16 exchanges across Europe and the US. That's a bit random. XTB trade online trading. Are investment trading apps worth it? Investment trading apps may appeal to investors on the move who are comfortable making trading decisions from a relatively small screen compared to a desktop. While most trading platform offers apps, it's worth comparing fees and the range of investments, as these can vary widely by provider. Some investors may also look for a more advanced functionality from the app in terms of technical analysis and charts. A recent FCA survey revealed that nearly 10% of all adults in the UK use a DIY or direct-to-consumer platform, significantly higher than in 2020. Interestingly, there's much higher uptake by men than women, and 25 to 34-year-olds are most likely to invest in this way. Right, I never even heard of these trading apps. Maybe I should, I need to have a look at them. Right, okay, but that's for later. Are investment trading apps safe? Investment trading apps have similar security protocols to desktop trading, such as password, PIN, biometric, and other security requirements, such as two-step verification. However, investors should ensure that they log out the app after use and setting up additional security features on their mobile device to prevent unauthorized use. How much money do I need to open a trading app account? This depends on the platform, but many allow investors to open an account with as little as £1 or £25 per month for platforms offering a monthly investment option. However, investors will need to add further funds to the account depending on the cost of investment they're looking to purchase. What type of trading app account should I choose? We've looked at general investment accounts that allow you to buy and sell investments via an app. However, there are a variety of tax-efficient alternatives. We've also produced guides on our pick of the best individual savings accounts providers, self-invested personal pension providers, and junior stocks and shares providers. ISAs and SIPs are types of tax wrapper, allowing you to pay no income tax on dividends, and no capital gains tax on any profit made on buying and selling your shares. In the case of SIPs and JISAs, you won't be able to access the money until you reach a certain age. Some, but not all, of the platforms listed also offer app-based ISA and SIP accounts, as well as general investment accounts. What is the best day trading app? Day trading is a practice of buying and selling shares over a short period of time, typically within a day. Day traders rely on volatility in share prices and can use investment apps to carry out their specialist form of trading. However, day traders need to be extra wary of the charges they incur, as these can rack up significantly, especially where a flurry of trades is carried out in a short space of time. Factors that would-be day traders need to consider is whether the app provider charges a low share dealing fee, provides access to a comprehensive range of shares including those in different international markets, has a good rating for features such as customer service. Read our in-depth guide for a review for a more detailed look at the best day trading apps. Okay, what is the best trading app for beginners? To help beginners looking for the best trading app, we've put together this in-depth look at the best trading platforms that are suitable for beginners. Most of the selection also provide an app version of their product offering. What are fractional shares? Fractional shares are a portion of one share, for example, 0.2 of a share. Why might you want to buy fractional shares? Well, if the company's share price is very high, as with many US shares, and/or you want to invest a small amount that's less than the price of one share. Only some of the investment trading apps on our list offers fractional share ownership. If you buy fractional shares, you will also receive the relevant fraction of any dividend per share. Ooh, very nice. What tax will I pay on buying and selling shares? You will be required to pay stamp duty reserve tax when you buy UK shares, calculated at 0.5% of the value of the transaction. This is not usually charged on buying overseas shares, although other taxes may be charged. You may also have to pay capital gains tax if you sell the shares for a higher price than the price you paid. This is charged on the profit, the gain you make, although the capital gains allowance is $6,000 for the current tax year. This means that you do not have to pay capital gains tax unless you make a total profit of more than $6,000. In addition, you may have to pay income tax on any dividend received from your investments. However, as well as your personal allowance, $12,570 in the current tax year, you have an additional dividend allowance of $1,000 in the current tax year. So anything above $1,000 you would have to pay income tax on. As mentioned earlier, you do not have to pay income or capital gains tax on shares held in ISAs, SIPs or GISAs. What is a limit order and stop loss? Ooh, this is like Forex stuff, isn't it? A limit order is an order to buy or sell shares at or better than a specific price. So if you want to buy a limit order at 100 pence, it would only be executed if the price is 100 pence or lower. Similarly, a sell limit order is only executed at that price or higher. It can be a very good way of trying to obtain a good price for your share trade without having to monitor the share price in real time. A stop loss can also be a useful tool to limit your downside exposure from investing in shares. This is in order to sell shares if the price falls to or below a level you set. How does monthly investment work? Some of the investment trading apps offer monthly investing, usually with a minimum of £25 per month. You set up a direct debit to transfer the money to your trading account on a monthly basis, which is used to buy the maximum number of shares possible each month. If the share price is higher than the funds in your trading account, the money will accumulate until it is sufficient to buy at least one share. Monthly investing allows you to benefit from pound cost averaging, which smooths out the fluctuation of the stock market as you pay the average price of the investment over the periods. However, it's worth checking the trading fees on monthly investing. Many of the platforms charge no or a lower trading fee for this option. If this is not the case, the share trading fee can become disproportionately expensive for smaller monthly contributions. What do I need to know about buying US shares? As with overseas shares, you will have to pay any share trading fee and applicable foreign currency exchange fee if you are looking to trade in US shares. You will also be asked to complete a W8BEN form valid for 3 years, which allows you to benefit from a reduction in withholding tax for qualifying US dividends and interests from 30% to 15%. Holding US shares also carries exposure to foreign exchange risk. If the pound strengthens against the US dollar, your shares will be worth less in sterling and vice versa. As with the UK shares, any profit on US shares will be subject to the capital gains tax unless you hold the shares in an ISA or a SIP. What regulatory protection should I look for? When choosing an investment trading app, you should check the FCA register to ensure your platform is authorized. This means that you have access to the Financial Ombudsman Service and the Financial Services Compensation Scheme if an issue arises. The Financial Ombudsman Service will consider complaints against trading providers and may be able to resolve your complaint if the firm fails to deal with it properly. The Financial Services Compensation Scheme will consider claims if your trading provider goes out of business and owes you money, but this relates only to certain investment products. If the product is covered, the scheme can pay up to £85,000 per investor. It's worth checking the protection offered by your investment trading platform. Some platforms are structured so that investments are held in trust to protect them in the event of a firm running into financial difficulties. What should I consider for share trading? Investments in shares can be a good way to produce higher returns than cash-based investments. However, your investments can go down as well as up, and you may not get your money back. Investing in a diversified portfolio of shares via a fund, investment trust, or exchange-traded fund may help to reduce your exposure to an individual company underperforming. However, if you are unsure as to the right path, you should seek financial advice. Right. So that's that. Other fees. I should delete this. Was there anything important from the Q&A that I should have written? Investment trading apps. How much do I need? What type of account? Yep. Right, I think so. SIPs, tap the red pay, no. Individual savings account and self-invested personal pension accounts allows you to pay no income tax on dividends and no capital gains tax on any profit made on selling and buying your shares. What is best trading app? Yeah, la-di-da-di-da. That's not important. Day trading, best trading app for beginners. Fractional shares. Okay, I should write this down actually. Shares are a proportion of one share. I.E. 0.2 of a share. What tax will I pay on buying and selling shares? Required to pay stamp duty tax, duty reserve tax when buying UK shares. Calculated at 0.5% of the value of the transaction value. You may also have to pay capital gains. Required to pay capital gains tax if selling shares if making a total profit of more than £6,000 when selling shares. I have as well as personal allowance, dividend allowance of that, so required to pay income tax on any dividends more than £1,000. A sell limit order, a stop loss, before trading. Okay, I think that's the information I needed from this website. Yeah, okay, so investing, gone through that. Oh, that's a lot of lessons to go through. Should I carry on with this or go to another website, say like this one, go back to Forex? I think I'm gonna go back to Forex, to be honest, because I'm steering a bit off topic right now, aren't I? I mean, I've already steered a bit off topic in the Forex bit because there was stocks and stuff in there. I mean, on the official Forex.com bit, lesson parts or courses. I mean, there was some stocks and commodities like lessons there which I've looked through, but yeah, I think my main focus now should be just trying to perfect Forex. So I'll make a note here saying saying I've stopped looking at the investing section on Forbes.com, and then we can always, because when we come back to looking at the stocks and stuff, we can always come back to this. But for now, we're going to carry on focusing on the Forex trading part because I think that's more important. So yeah, and because of that, I guess we finished reading the Forbes page, so we can leave that and then go on this page, which I've loaded up before. So yeah, thank you guys for watching, I guess, and I see you in the next video then. Bye.